So I got my signals crossed with Mark because I was supposed to look back and then look ahead. So pretend this says looking back and looking ahead to 2021. So I want to touch on the global economy and then what matters most for 2020 in our view. And I apologize, I have the my annual winter cold that I'm fighting here. But I mean, this year can't end fast enough, I think is a safe statement for all. This has not been an ideal year, and it'll be one that we'll remember forever. This is a snapshot of the global economy from the IMF, and the estimates start actually in 19. But you can see the global economy has been steadily growing for, back to the 90s actually. And what you can see is how strong the growth has been and what they're projecting in the subsequent years from 20 going forward to 2025 is a pretty significant move up from there. But what I think is important about this is how many people have come out of poverty globally over the last 20 years. So for all the talk about income inequality, which is real, and I don't want to minimize that, I also don't want to minimize the fact that about 2.5 billion people have been lifted out of poverty since the early 90s. And we have a long way to go, but that is a pretty phenomenal change that we've experienced going on. So I wanted to look at the economy a couple different ways. So this is global growth and what's projected, what it was last year and what's projected for this year and going forward. So the blue line is the global economy. The orange is the advanced economies, and the silver is emerging market and developing economies. So very consistent with what it's been in the past, with greater growth coming out of the emerging economies going forward. But it's still a very strong growth rate, particularly next year and into the following year for the advanced economies. So we think this is an important thing to keep an eye on. I don't really like to go out too far, but going out to 2023, you get a sense that a big reversal coming next year and solid improvements on the global economy going forward. What I also want to look at is something I've talked about a lot, which is gross government debt to GDP. The blue line here is the developed advanced economies.
I wonder if you just want to listen for a couple.
I'm sorry. And the orange is the emerging economies. And clearly we've seen this move up from 07, where we started to see a big increase in government debt, particularly in the developed economies. And they saw it flatten out, and now we're in a step function up again, but then a flattening out of the debt to GDP. What's important about this chart isn't the actual levels, but what is the outlook for interest rates? Because if you have interest rates at near zero, these debt increases don't put a lot of pressure on government's debt servicing costs. So if you can manage your debt servicing cost appropriately, you can take on the higher levels of debt if you make good investment spend. And that is going to be the challenge for governments around the world. How good is their investment spend? So I wanted to take a step back and look at China going back to 2000 and where it is going forward. And just to put this in perspective, if I took this back to 91, GDP for China in US dollars would have been just over $400 billion. And now you can see it's projected in 2025 to be about $23.5 trillion. So big significant moves and an acceleration coming. I think there are real challenges with the China economy that are down the road, but are coming at a lot faster pace. I think what you saw with Ant and with Alibaba is one of the first signs of a challenge for their version of capitalism, that when you have global champions or national champions, they can't get too big in China. So the party has to get more involved. And as good as I believe the China government has been in managing their economy, I think managing the capitalist side of the economy is a lot bigger challenge than managing some of the industrialization. So I think there are challenges ahead. Demographics are one. Some of the geopolitics is another, the impact of trade wars. So I think there are some challenges going ahead, but clearly China and the US are driving the global economy and should continue to do that. Shifting to the US, similar picture, not as quite a dramatic a chart, but I think if you went back to 2000 and said, if we're going to grow at this rate with wars in Afghanistan and Iraq, with the problems of the tech bubble, with the problems of the financial crisis, with subsequent actions that we've had all over the world, and now with the pandemic, I think this is a pretty healthy chart and a sign of a very resilient economy, both the US and global. And I don't want to sell any of the other countries short, but this is a very adaptive and positive economy. And you get to see some of the difference between the leaders, the US and China, when you look at the European Union. And I think they've had their fits and starts. And I think there are still some real structural issues that exist in the European Union. But we think this is going to continue to be in an area where the global economy is going to continue to gradually move up. And if it's moving at a 3 or 4% rate, then the issue is, can we keep our debt servicing costs from increasing at a below level? And if we do, we'll be in a good shape going forward. So what matters most and where do we think we're going? We were very fortunate to come into this year in a very strong position, both for the global economy, for the US and China. China's ability to navigate through the early stages of this and to be the economic driver for the early part while the developed economies were struggling was a big boost for the economy. Then you had the massive stimulus that came in, which actually carried the economy and should carry it into 2021. So what really matters is the vaccine distribution and effectiveness. We think the major transformations that are occurring are going to matter and matter more. Those are starting with the digital transformation, the climate transformation, the education transformation, but also the geopolitical and political one, the social one, and the fiscal and monetary ones. All those transformations occurring at once are going to be a massive challenge for the global economy. How we navigate this is because we're allowed to buy time, because the massive amount of stimulus that's been put at the problem, and that continues to work through the system on a lag basis. So if you thought we put a lot into the system this year, next year in the 18 months subsequent is when you really start to see the benefits. So that's going to continue to push the economy forward. Earnings are on the rebound. And when you look at the charts, what you're going to see is some very even results for the winners and losers of this year in terms of who rebounded earliest and what Q2 might look like in terms of year over year comps. But that's going to be a positive. And we continue to see earnings rebound up into 21 and 22 and maybe even into 23. We do believe that the stimulus is going to be directed towards more infrastructure spending to address many of the social and economic issues. We have massive spending needs here, and many of them are not postponable. The way you do that is to keep rates low to allow governments and the private sector the ability to finance a lot of the needs that we have, which you're paying for with very low cost debt. And then the last couple, cash on the sidelines matters, and it matters big. The regulatory environment is going to shift. How much depends on the Georgia election. And the Georgia election will also play into a lot of tax and other policies. And finally, how does growth and to value rotation play out? We think that it's going to be less severe than a lot of people think, which will have a lot of investors wrong-footed. But overall, we're very positive on the outlook, notwithstanding the problems that exist in the system, because we think the leading economies are going to continue to lead and drive us forward. We think that in the early stage, we have some humps to get over. We think what's going on with the case loads coming up and also with the hospitalizations, we're in a tough spot right now, and we have to keep an eye on mutations. But if what 20 taught us at all is the ability of our world to come together to solve big problems or to address big problems very quickly. And I think we're on a very positive track to push the economy back onto a more positive footing, and that should take us into next year. So the last thing I want to leave with is my thoughts on what Mark's accomplished this year and what this community has accomplished, and what you guys had just talked about with the 361 just shows the community is so much more than investments and investment returns and making money and pushing capitalism forward. It's so much more about helping people and helping the world we live in. And if there's a better foundation for it, we should direct ourselves to that as well, because Mark, what you've done this year is phenomenal. So thank you. And thank you all for listening in. And with that, I'll take questions if you have any.
Well, thank you, Stephen, for whether you've got a winter cold, or I guess we gave you an excuse a couple times when Sean Lawless stepped in for you. But you've been you've been, in a way, Uncle Steven through this whole fluid situation. And, you know, I can, whether you're right or wrong, you're usually right because you got a whole team behind you and you got lots of, it's very thoughtful. But we have it all on video now. So if you know, I could give you some I told you so's or he told us as we look back. But let's go just with the things that Stephen had, and I mean, you coupled that with what you talked about last week. You know, I'm amazed by, you think there'd be tons of headwinds, but seems to be some resilience.
Well, I mean, clearly there are plenty of headwinds. The politics around the world is sketchy at best. And I think what's going on in China is actually a fascinating fight between who, how that economy moves forward and how the government role increases. Does that push things forward or not? The US, we have real issues in terms of our geopolitics, and Europe is just finding out what it's like without the UK is in it. Is that going to help either one or hurt either one? We need to see how that plays out. But I think it's going to be, there are headwinds, Mark, and the health issue is a big one. And the strides we've made are phenomenal, but the challenges are plenty. Debt being one, demographics. The secular stuff we've talked about is not going away. Anytime soon, you may have a pocket of inflationary pressures, but these low rates are low for a reason, and they're a sign of an economy that needs to heal.
So questions or any opinions?
I guess, Stephen, I'd be curious. I mean, you kind of touched upon the emerging markets and how the growth rates and relative debt to GDP levels looked. Is that an area, you know, relative to the U.S.? Do you think do you think the U.S. is a better risk reward, relatively speaking, or do you guys think that, you know, the EM space is an area of, you know, outperformance, relatively speaking?
I think the weaker dollar is going to help the emerging economies quite a bit, but it depends on if you're a commodity producer or how your debt's denominated. I actually think rather than focusing on markets, people should be focusing on individual investments and not thinking about the markets as much, because I think there are big pockets of problems in the developed and developing economies. But I also think there are big opportunities to build capital because the innovation that's going on globally is nothing short of spectacular. But we have real deep issues that we have to deal with around the world too. So I think you'll see a pretty good rebound in the emerging markets, but I would say travel with caution.
Okay.
Other comments, questions?
It's Greg Mariash here.
Greg.
I've been involved in EM for 30 years. If some of you saw my profile, I completely agree with Stephen on his emerging market views. It's rather treacherous to fall into that boilerplate buy EM because the dollar will be weak and maybe commodities will go up. It's definitely on the right track. And the point that he made on focus on investments couldn't be clearer and more right, because what's happening now, this is, I'd like to say, this is not your dad or grandfather's emerging markets anymore. No longer a group of homogeneous problems affecting a large swath of countries. You know, we've taken care of hyperinflation. We've taken care of, in largely, currency volatility. Central banks pursue orthodox policies now, and innovation's happening worldwide. So you're better off focusing on companies and what they're doing because it's all globalized now. You know, Tata Motors owns Jaguar and Land Rover. Fuel cell technologies are coming as much out of the developed world as they're coming out of the emerging world. So I second that. Thanks, Stephen, for bringing that up.
And Greg, you just touched on it. Nuclear, and if you want to see where nuclear is going, look to China. They're trying to bring back nuclear energy in a major way for greening their economy. So a lot of the differences of the way people act and react to various issues are going to be managed very differently around the world, and that's going to create different opportunities. But I believe the market has moved past passive investing right now as the best handle and moving more towards taking a more stock-specific approach. And I think that's going to continue into next year.
Good stuff.
I just threw on the screen, if you can see, Greg did one of his predictions, and again, I guess I'm plugging again. I think everybody here, if you haven't done it, like Nzube, but you can all go and see from Greg's profile. I didn't mean to pick on you, Greg, but
No, it's fine. Thank you.
It's fine.
I did mean to pick on you, Nzube, though.
I figured. I will respond. It's okay.
Okay. Other questions?
Steve, I think what's your opinion on the dollar weakening and that being a trend in 2021 as well? And if that's the case, will the Fed lose the flexibility of negative interest rates and maybe even be forced to pause asset purchases? Is that sort of a tail risk scenario for you?
The dollar weakening is a mixed bag, to be honest. I think we worry whenever the dollar gets too strong, given the amount of debts that exist in the global economy that are in dollars. So the weakening of that takes a lot of pressure off the system, which we think is a positive. But I think the answer to your question is it depends on what the other currencies are doing too, because as the dollar's weakening, countries like China and areas like Europe are worrying that their strengthening becomes a competitive disadvantage, and what do they do? How long can Europe take a stronger currency when they're of the major areas struggling probably as much as anybody? So when we look at it on a relative basis, and right now it looks very one-sided, but I think the other countries are going to have to think about if it continues to go down, are they going to have to react by weakening their own currencies? And I'm pretty sure the Chinese government is not thrilled with the dollar weakening quite as much as it is right now.
Right.
And I know the ECB's raised it as an issue. So I think there's a race to the bottom going on in currencies right now. And you really have to think about it on a relative valuation basis as opposed to an absolute one country basis.
Makes sense.
But the rate of change,
Oh, sorry.
Eddie, is going to be a big issue. If it moves too fast in any one direction, that's when you start to see dislocations at the global economy. So sorry, Greg.
No, I have a slightly divergent view on the renminbi and what type of policies they're actually pursuing. What's been really interesting throughout this bout of renminbi strengthening that started a little after mid-year 2020 has been that current account surplus in China is hitting records again. So despite the strength in their currency, they're still seeing a lot of inflows coming in through the current account balance. What I've been thinking is that they're somewhat pursuing a strategy akin to the U.S. post-2008 crisis, which is maintain a currency that will not have the traditional volatility or that is not seem to be weakening in order to attract capital flows, right? So they've been, in my view, extremely deliberate about constructing a plan which started with the inclusion into the SDR, the IMF SDR, which a lot of people said, it's not a very big, meaningful thing, but it set the pillar for welcoming China into the big club of stable currencies and reserve currencies. The next move was to get A shares incorporated into the MSCI, and those are in, and they're in at a lower weight, but that weight has been increasing and possibly will increase more, depending on some of the restrictions, perhaps that the United States puts on investing in Chinese shares. And finally, the bond inclusions into the global indices, which the U.S. was a huge attraction for capital post 2008 for many reasons, and those have been exhausted in terms of talking about why the U.S. is preferred destination for capital. And I think China is trying to replicate some of that. So I'm not proponent of strong renminbi devaluation at this point. I think it actually either stays where it is or it gets stronger by policy. Now, all the other points on the other currencies and the race to the bottom and all that is unfortunately true. And it's happening, and we'll see. So it's, again, going back to those boilerplate investment recommendations, saying a weak dollar is a harbinger for emerging market investment. You have to think about what's the dollar going to depreciate against if everybody else is trying to follow the same policy. So that's one of the places where I think we can see volatility, and it's been one of the things that the crypto advocates have hung their hats on, in terms of saying, this is not an issue with crypto or some of the cryptos with the limited supplies and et cetera, et cetera. So it's going to be very, very interesting in 2021.
Hey,
I
Stephen,
think
it's
the other
Duncan.
thing that's not fully appreciated by the market is how China has been actually managing their slowing of their economy against a really difficult backdrop to avoid some of the excesses that they've had and make it a more sustainable growth rate, which they've been dropping it down. But I think that's going to have a big factor into how China plays out going forward, is their ability to manage their slowing in a way that doesn't stall and allows them to convert to, as they've been doing very successfully, a much more consumer-driven economy.
Duncan had a question.
Yes, hi, thanks, Mark. Stephen, it's Duncan. I just wanted to, I think this is a really interesting theme on the currency value. And while I can see that a dollar that's too weak could, become an issue, we're pretty far away from where, it's been historically over the last 15 years versus the pound, the euro, Canadian dollar, Aussie dollar. I guess the big, China's like the biggest player there. But I was thinking about it in these terms. Talk about a race to the bottom. What the last 10 years were sort of about was sort of a race, or actually last 20 years, were a little bit of a race to the bottom on corporate tax rates. And the US finally kind of caught up to the game, when Trump changed those rates. And, to me, it just seems like they pretty much, globally, we've sort of exhausted that game, I would have thought. So I could see this, my own personal opinion is I do think it's switching to currencies. I feel like there's quite a ways to go with the dollar. And I also feel like, how would you fight that trend in the US right now? One thing that they've figured out is when you can borrow money at zero, it's really hard not to just give it away to people, right? For this first time ever, it's like we can spend all we want on the coronavirus, whether it's efficient or not. And, the other thing is we can clearly, for the first time ever, the US has really embraced this, the first form of universal income. Just the conversation we've had this last week. And so it would just seem to me the themes really favor the dollar getting quite a bit weaker. And what would somebody do to offset that? And maybe it is the next tool. And I guess the only thing that confuses me on it a little bit is if there's really a movement to outsource less manufacturing and be less dependent on imported goods, if that becomes a little bit of a global theme, maybe none of this matters as much as it used to. So this is sort of I'm talking out loud here. I just thought maybe you might, I'd love to see the group here pursue the conversation a little more. I think you could drill down deeper.
You bring up a great point, Duncan. I think you're right about the shift that's gone not only in the US, but Europe has changed their tune on austerity as well. So when you shift from austerity to stimulus the way we have, that's going to weaken currencies quite a bit. It's just a question of how it works on a relative basis globally. And then you have to look at the biggest economies and the biggest currencies and see how they're acting to make your determination. And I think we've had a pretty sharp move with the dollar weakening. I think it can go more, but I don't think things go in a straight line. But from a market perspective, the last two times we've seen a 20% decline in the dollar, what you saw was a big rebound in equities where it was up 23% one year and 13% the other year it happened. So it's not all bad as much as everyone thinks either. Multinationals do much better with that. And it's not the end of the world that the dollar which was quite strong, gets to be more in line. So I think you'll see a lot of ebbs and flows, and I think next year will have a lot of volatility, particularly coming out of the blocks. And then I think the second half we'll start to see an easing in the volatility and could end up to be quite a strong year.
Anyone else on currency?
Yeah, I'll throw in my 2 cents. Yeah, Greg, I think you're spot on. You know, we've at my prior firm at Morgan Creek, you know, we were big investors in China and watching that for a long time. And you outlined the game plan, you know, extremely well. The Chinese want a seat at the global table, for better, for worse, or news or not. They probably don't want to dominate it, but they want a seat there. And I think everything that you've seen thus far, you know, again, that you outlined well, is just all along that path to strategy. And I think that minimizing the volatility of their currency was absolutely a policy objective. And so, you know, now that is an interesting thing, to see how far they're willing to maintain low volatility, but perhaps greater spread, you know, against the US dollar and others. And there could be a point, you know, where that peg, so to speak, you know, gets pulled, and that'll be interesting to watch. So, you know, it's yeah. And Stephen, your point about everything being relative is absolutely spot on, you know, as well. The one, here's sort of a question, though. In this era where everybody seems to be embracing MMT, it seems as though that no longer is it necessarily quantity of debt, but it's the ability to refinance. And, you know, I know that it's fascinating that the buyers of US debt are actually ourselves, between the Fed, other government agencies, and then, you know, state, local pension plans and others sop up an awful lot of that. But I guess, you know, the question that's looming out there is at what point in time is there just like so much that we can no longer refinance? I think that's a ways out, but I'll leave that question hanging out there if anyone's got a thought on it.
I think it's
What do you know the percentage of US versus non-US purchasing?
I've got a slide for that somewhere.
Or could you throw that on the app?
Yeah, I'll try to dig it out.
Okay, sorry, go ahead. Someone was beginning to speak.
No, I think my 2 cents on that is completely agree with Bill. The path that we're heading down, and the question of where's it going to stop, or where's the market outlook in terms of financing the debt going to change. I think it's related with the new Fed outlook on average inflation targeting, and how long they're going to let that go if in fact that inflation manifests. While at the same time, we do not have the traditional tools anymore of understanding where they're going to stop, because there's still people out there that believe in yield curve control. So the idea seems to be let inflation run hot until it's run hot enough that we will have achieved a average inflation target. And at that point, maybe start intervening traditionally again. The problem is, you know, my experience, and it comes from EM, and it has to do with inflation expectations. When they come undone, they come undone. And then there's nothing to stop it. And then there's generally no rate. Now these are traditional EM hyperinflation events where there is no rate that a local central bank can pay that will make it stop. And you generally go into the pegs and the currency boards and the super orthodox plans to stop inflation. Now, will a developed economy and a reserve currency economy like the U.S. get to that point? I don't know. I think the biggest challenges with MMT is it moves everything to the fiscal front, including trying to stop inflation via fiscal, which means you raise taxes rather than raising rates at that point. So it's all new territory. I don't know, and it's very interesting. the guidance from the World Bank and the IMF with respect to emerging markets and the level of debts where we're at is, don't worry, issue now to be able to stimulate so your economies don't run out of steam, and we'll deal with the debt effects later. That was the predominant thread in the IMF World Bank meetings in October. Investors have taken it to heart. And, yields are, with very specific exceptions, Argentina, maybe Turkey, depending on the day. Everywhere else is not having any problems raising financing right now.
Any other perspectives? Rob Collarino, I see that you just joined with a new haircut. You look 10 years younger.
I was supposed to look
don't.
older.
You're in grad school.
I've been doing the COVID jogs, but to your question on that perspective, I was you mentioned EM. I was just curious, on that. Did you have any, Greg? Did you have any thoughts on Africa? Because I think there's interesting volatility there, but I think there's some bright spots.
I think that goes back to the first comments we were making that Stephen pointed out, and concentrate on investments rather than geographies or regions or countries. So there's good things coming out of there, and it's the one place where you can still try to achieve traditional emerging market type returns given the state of development of a lot of these countries. The interesting things that are going on is the lack of US and to a lesser degree European participation in investing in Africa, and a lot more of Chinese aid and Chinese participation there, which puts the rules more in a Chinese framework than a Western type framework. So there's a little bit of digging into who's behind some of the investments and who's controlling them. But I think that's the final frontier in emerging is certainly Africa.
Yeah, just one footnote there is that while like a mega firm like Carlyle was there, and then they're sort of wrapping up that model and kind of passing it off, taking it past other places. I think you are seeing interesting pockets from Europe, from Asia getting there, even family offices from North America. Likewise, you're seeing that in kind of pricier areas like Southeast Asia. I got in a little later, but I was following the logic here. Vanessa may have comments from her roots in Brazil. I think you mentioned South America.
Hey, this is Mike Daly. I just wanted to jump in with a quick commercial announcement for anybody that joined on late, and maybe explain the chat that I gave to Rob. I wanted to thank Steve. I wasn't a big fan in the beginning of the macro broadcast, the perspective and the format, and I'm really appreciative now, Steve. I've come to look forward to your weekly updates. It's like vitamins, and the guys that comment and that interact with your information, nothing short of brilliant on this call. So I thought we'd have a larger crowd, but if you missed the earlier part of this day's session, we are encouraging people to get out to the link, which is in the chat, and participate with us on the 8 to 80 event that Sarah Trubridge has championed with her celebrity status and connections. So it's in the chat. Maybe Mark will put it out there again. You double your chances to win if you get on by noon today. And then we ask you within 48 hours to go find somebody in the network. I chose Rob to make sure that you get another person involved.
You chose Rob?
Before year end.
Rob's your
I
guy?
chose Rob.
Rob's your guy? Okay.
Yeah. I
got to find someone. Again, what this is doing, it's helping 8 to 80, and Charles had described earlier what some context. And Sarah had worked on the film, so we're going to show the film. And you can see the agenda. There's a screening, then there's going to be a time to spend time with Jerry and Steve, and then there'll be a general event where he'll be interviewing Steve, interviewing Jerry, talking about certain themes, and then the 8 to 80 zones will take 80%. We received 20%, and that's really going to be seeding our foundation. We're getting actually Michael is a lawyer tax advisor, is helping us put some of the paperwork together right now. And we're going to punch above our weight because of this network and try to help each other's causes. And I showed a video. Many of you had been speaking about your philanthropic causes, and I think by teaming together, we can help each other monetarily and otherwise. But yeah, if you do just join today, click or register today, we're going to give, there's a incentives, yes. Sarah, so maybe you want to talk about that, Sarah, real quick.
Well, we're doing, if you register today, we are raffling off a helmet that is signed by Jerry and Steve. And by registering today, we decided that we would double anybody's tickets. So if you register, for instance, at the luxury box, you get 5 tickets, we'll give you 10 today. And again, the VIPs get a swag box we'll be sending out. And we really are looking forward to a really good event. Mark, can you share the screen? I want to share something.
I mean, like you share, sure.
Yeah.
Plus you should show them what that swag box has too.
Well, no, it's a surprise. I can't show everything in the swag box, but I do want to share. I'll hold it up. Let me get the box. I will say that Jerry donated some things for the box. Can you see the box? In Search of Greatness, Ed Links, My Company, 360, 8 to 80. You will get that in the mail. It'll come with a stress ball. And I want to share something before people go. I'm going to share something that I'm only allowed to share in-house with you guys.
Is this the picture of you and Jerry?
Yeah. I'm not allowed to put this on the advertising thing, but there you go. Can you see it?
Yep.
Yep.
In witness protection, Sarah?
Yeah, exactly. That was at a golf tournament, at a LPGA golf tournament where Jerry was.
Nice.
Yeah, you could see his Super Bowl ring. He shows that prominently. But yeah, there I am.
By the way, my 4-year-old still thinks she's going to California today to ride a horse with you.
I know it. I can't wait.
Explaining to my mom that she already made an agreement,
I'm going to wait for her. You follow through, Daddy.
Yeah.
I'm really excited about this event. And like I said, there's some real fun things going in the swag box, usable things, not just crap, but some real good usable stuff.
Are we still trying to get a Dennison sweatshirt in the raffle prizes?
That's up to Mark.
We can definitely throw that in.
Yeah, and like I said, I just also want to give a big shout out to Jack and Michael and Charles and Dallery and Mark and all the incredible interns. They have just put in a lot of work. The 361 team put a lot of work into this. So I want to thank everybody.
Awesome. Thank you, Sarah. Good stuff.
All good stuff. Yeah. If anybody wants to contact me with any information, I just also, I want to put one more plug out there. Gabe Polsky, the director of the film, is going to be joining us for the VIP session. And when people register, there's, I believe, a field for people to ask questions. The way the VIP session is going to be run is I'm going to call on people who have questions for Jerry, Steve, or Gabe. So if you have questions, please make sure to put those in when you sign up, or send them to me.
Yeah, and really interesting people. I think this will be a catalyst. I don't know if Charles is still on, but this is something that I think will be an interesting dynamic for both the professional athletes, current, former, and our platforms as we interact more and more. Many of them have charities. Maybe they can be involved in, and our deals are charities. So I think that's the whole idea, is just this will catalyze a lot of that collaboration.
Sounds good.
Hey, Mark, this is a quick question for you, and I see Charles there as well. On that, Steve Young, as I recall, is involved in either a venture fund or an entity with some other athletes. How is that performing? Have you guys thought about having that present here as well?
So they changed the name. It's out of Salt Lake in San Francisco.
HGGC.
Yeah, and I know some of their people. I've yet to, in my earlier 10 years ago, I interacted with them, but maybe this will catalyze some of that as well.
And I'm going to just put out there, Jerry is very active in a number of ventures. He has his goat fuel, which is going in the swag box.
You're giving it all away, Sarah.
I know, I'm just giving a little hint, but I do want to.
What that is then, so they know.
The goat fuel is an energy drink that Jerry put together from a healthy nutritional standpoint, and so it's goat fuel, greatest of all times, GOAT, and like I said, he's got entrepreneurial ventures as well. So that's a nice little connection with Jerry for the network. Charles, did you want to share anything?
No, I think, like Mark said, I think this is an excellent opportunity just to kick off an initiative that Mark and I have been talking about for a very long time. And that's just diversifying the platform a little bit more and getting more athletes and entertainers who are actively involved and investment opportunities, to get them engaged in the platform and allow them to take advantage of all of the different aspects 361 brings to the table.
And I want to introduce Dallery Dalton, because speaking from the athlete and entertainment world, that's where Dallery resides as well, with the sports and entertainment. So, and Dallery works with me on EdLinks as well. So I'm very grateful for her participation, but I wanted to introduce her to the crowd as well.
She's been great. Thanks, Dallery. But yeah, like Tino, it looks like your business is growing. Maybe you can get an athlete sponsor to, you have to like suit him up with his home office situation, or her.
Yeah, I mean, absolutely. That would be an awesome influencer type of referral. And I'm also putting in the chat the name of Brian Zwerner. He runs a Series A type of athlete, sports-related fund out of Atlanta, I believe. So I can bring him into the group if
great.
Yeah.
And I think, MJ, there are athletes that I've worked with also that will probably want to connect with you, with Lucid as well.
Yeah. I think the great thing that Mark and I discussed about bringing others into the forum is that there are a lot of athlete groups out there, but there aren't athletes running those groups. They have portfolio managers or CFOs actually running deals through to them, and them not actually being educated totally on what those deals are. What we want to do is actually educate them on the deals and partner them, or at least introduce them to individuals like yourselves, Tino, on the platform, so that they can be educated in the investments that they're participating in, and actually take a more of an active role in the operations as well.
To that point, Charles, I know Burke and I talked about a curriculum. I spoke with Ron Diamond yesterday, and he's setting up Stanford's family office platform. I don't know if you know him, Rob. You seem to know everybody, so I just threw it. Just check.
Yeah, he's a friend. Ron out of Illinois, right?
Yeah, Highland Park. I was talking to him yesterday. We're talking about being advisors to each other's platforms, and the idea of a curriculum, sort of for family offices, where we could sort of have a special relationship with them. And I know Charles, that the NFL has been working with Michigan and other schools on sort of coursework. But yeah, there's ways to plug and play if we can collaborate better.
Yeah, and Valerie, do you want to share about your Johns Hopkins connection at all?
Hi, thank you. Yeah, the Johns Hopkins has set up an online certification course, which is around sports and entertainment and philanthropy. And the faculty of that certification course are predominantly around.
Oh, you just froze up.
I
think she froze. Hey, Mark and Charles, I just have a quick suggestion. I was just processing some of this ideas and energy. Here's an idea. You've done great to reach out to both really good schools and participation. That's part of the connectivity of the community. But I think there's a lot of either mid-tier schools to even some of the Ivy League schools, that this could be a program bridge towards not so much athletic department, but athletic foundations. And usually these foundations are, Charles, we're both, UVA alumni. They're pretty well-heeled donors who give back to the school. They pool money into this entity. Some I think it's for-profit, some maybe not-for-profit. But long and short, an idea could be this. You could do something where you invite maybe one or two folks from these foundations. And if you get two folks from the foundation, maybe they give a scholarship participant to an underserved or an in-need type of athlete. So you have the benefit of participation of the schools and the foundation and donors to 360. But then there's an ESG angle with respect to the let's say the scholar athlete, and they could interface with a Hall of Famer. What do you think of that, Charles and Mark? I mean, logistically.
Or I think if we could also throw a little bit of mentorship into it, because that comes from my alumni connecting background, which merges these worlds.
And Mark, I've talked with Nan a lot about, Nan
is the head of our athletic department, Dennis.
Yeah, and Nan, there's a whole thing that she's put together with the whole program and the news center that's going in at Denison. And she and I have been really in communication. She was my class, and we've been in really strong communication around the movie and around other activities. So I think your idea, Rob, I think it's all good.
Any other thoughts, questions?
Valerie, are you back with us?
Was I out? I didn't know.
Yeah. You were
Sorry.
starting to talk about the Johns Hopkins connections with the Tiger Woods and all that stuff.
Oh, sorry. So the Johns Hopkins is their program is a philanthropic where their faculty members are with the Nike philanthropic interests, the Adidas, Tiger Woods Foundation, and the Major League Baseball Players Union, and a variety of others. And so their faculty network is pretty phenomenal. And then the alumni of that certification course are the sort of boots on the ground people who are working with either, as was already mentioned, I think Charles mentioned it, the individual athletes and their foundation. So the executive directors for those and different program managers who are learning about the on the grounds efforts, but the faculty is where is kind of where the network gets
Yes.
Get.
Hey, Mark.
Well,
Mark.
Yeah, MJ. Go.
Yeah, I was going to say, I think that it's so important to focus on the philanthropic as well as, the social impact. As we're coming out of COVID, I mean, there's going to be such a need for so many people who got hurt in so many different ways. And when speaking, on behalf of a social impact company, we actually lead with the double bottom line compared to the bottom line. We decided to push our revenue model off by a year because we're not going to charge people in an addiction to get anything. But it required an extra $1.5 million on our part, which then required more investment. And this isn't just me, this is millions of entrepreneurs that are leading with their heart as opposed to their wallets that need help. And I think that, social good companies is really where, as we're coming out of the COVID, and the philanthropic is something that we need to focus on so heavily, because it's the people that we don't see that are the people that need the help the most.
So there's a really bad looking slide, but we're trying to have 3 legs of the stool where we have these events where we help each other. We're going to have more groups by philanthropic areas and events. Obviously, we're going to have events that are purely for investors to look at asset allocation, and then we're going to have the foundation aspect which sometimes I think it's just going to be a virtuous cycle as we get going here. And in education, as keeps coming up, I think that's our ties to the alumni worlds. I think we can have access. I think education's got to be that's an 8 to 80 or 8 months to 80 years old type of thing. Everybody has to keep recalibrating.
Which reminds me, we're going to do another education 2 deep dive. So we'll be putting that together as well.
Yep. Well, it's nearing 12. We did say if you signed up for the and many of you did, I appreciate it. We appreciate it. We'll probably extend that to 12:30. Just we'd like to do it while it's fresh. And for that you get double the raffle tickets. We're going to be throwing in not only things into the swag box. You got the helmet signed by Steve and Jerry. I just heard we're throwing in, I guess, a Dennison sweatshirt. It may be used. I'm joking, but we'll throw some of that stuff in. And if anyone else has any good stuff to throw in, maybe the Charles Way signed football could be something we could throw in there.
Now you're talking.
Yeah.
We can work on something like that.
Okay, I'll bring the football. You bring the signature.
All right.
I love it.
So again, thank you, everybody. It's our third, I think it's our 37th or 38th consecutive weekly briefing. Thank you, Stephen Burke. But as you point out, Michael, it's really a village. It's all these smart people sharing. I think as we look at next year, I do, let's say a year from now, I would like to think that we've really, and I know not only, I just maybe one quick slide. This is sort of our deal success stories this year. But I want to have like philanthropic and impact success stories to couple with that. So like Manus Bio, they did their 85 million. It is a great impact story. We have some investments into the Visionary Fund, Clean Fiber, which is Turner Smith, but that technically was last year. Nabari. There's this Working Lab Capital that people know, Rich Nespola, doing credit for, impact-oriented food and beverage companies. Nacero, which Eddie invested into, just raise another pile of money. They're going to do a $7 billion natural gas to gasoline, big impact aspect there, because no refining process. And then And Chris Woods was really active, and you haven't seen him for a while because he's out there killing it. He's got this new platform for distributing in the healthcare systems, including, and we have another private equity fund which has a refrigeration company, which is incredibly important for vaccine distribution. So a lot of interesting ways our network is out there, both in business, but I would like to see us have philanthropic success stories to many of the points you guys made today. But thank you. Big thanks. I was saying from Ohio, but I'm from Ohio. I can't take the boy out of Ohio. From New Jersey. Thank you to everybody. Year's not over yet. If you haven't done your prediction survey, you know who you are. In fact, I think
when's it due? Is it end of day tomorrow?
Technically, yeah.
Technically,
Just if you want to get in the highlight reel, we're gonna send out. And Peter Daniel, I think, just joined to do his. I got like every 10 minutes for the next hour. I'm interviewing people. But you don't need me. You just do it. Just film yourself. You can take 20 minutes like Jack Wyatt did. You can create your own format, apparently. Just reflect and predict is the point.
Well, I was proud that I reduced the speech down to 33% of what it otherwise would have been.
Yeah.
But apparently the pride isn't shared by anyone else.
Well, I think records are made to be broken. So maybe Turner Smith is gonna shatter that record. Well, listen. Thank you again, and this has been a great year. Been a tough year, but in many ways, let's just emphasize the positive and create positivity, make money, and make the world better.
Happy New Year, everybody.
Happy New Year.
Happy New Year. Steve, thanks. Mark, thanks. Everybody have a great day.
Thank you.
Happy
Thank
holiday.
you, everyone.
I gotta find Mike.
Go Ohio State.
Happy New Year.
Go Big
Thanks,
Ten.
Mark. Good
Go Big
good
Ten.
work on everything.
Thanks. Happy New Year. Bye. Bye, everyone.
Hope to hear from you soon. Peter, stick around. Thanks, Duncan.
Thank you, Mark.
All right. So our friend Peter Daniel, how are you? And S is on my team. Peter, you're on mute though. You have a much more interesting room behind you.
There you go. How's everything going?
Good.
So I just want to bring you up to date with what I'm going to be doing.
Okay, please.
I can send you a little overview, but I'm going to join a platform called Analyst Hub. It's started by some ex-Bernstein people. I'm not sure if you're familiar with it. It's not dissimilar from Stonehaven in terms of what their mission is. It's basically a backbone for people to leave bulge bracket firms and open up their own research shops. So they've got a full broker-dealer license, which Stonehaven didn't have. So I can trade, I can do cap intro, I can do deals, I can get co-managed deal participation for underwriting. So it's a full broker-dealer license. They started it about 3 years ago. They've got 20 research analysts on the platform that basically have their own shingles out doing research. I'm going to be kind of a hybrid in terms of just a content aggregator, a cap intro person, a deal aggregator, whatever, right? So all that kind of stuff. So
you see ways, because we do broker-dealer to broker-dealer agreements on deals. Maybe is there a way that we could still?
No. You and I, we should really try to figure out a way, to collaborate on stuff, because the economics are not dissimilar from Stonehaven in terms of the cuts and whatnot. And I'm happy to add resources to your platform